This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Oil prices fell for a third trading session on Wednesday as concerns about fuel demand were stoked by expectations that minutes due from the U.S. Federal Reserve will indicate a need to hike interest rates. Brent crude futures for April delivery fell $1.13, or 1.36%, to $81.92 a barrel by 10:25 GMT. West Texas Intermediate, WTI, crude futures for April dropped by $1.18, or 1.55%, to $75.18 a barrel. The U.S. Fed will release the minutes of its latest meeting on Wednesday, which will give traders a glimpse of how high officials are projecting interest rates will go after recent data showed stronger than expected U.S. employment and consumer prices.
Kazakhstan may send the first batch of oil via Russia's Druzhba pipeline to Germany in the coming days, possibly on Wednesday. Russia's RIA state news agency cited Kazakhstan's energy minister Bolut Akshulikov as saying on Wednesday, "I really hope that it will go today," Akshulikov said. Kazakh supplies are meant to replace those of Russian crude that the European Union pledged to stop buying as part of wider sanctions prompted by Moscow's invasion of Ukraine.
Moving on to the top news in the energy sector.
Chinese utilities and traders have stepped up purchases of Australian coal in February, encouraged by signs of further policy relaxation after trade partially resumed last month following a 2-year hiatus. In early January, Beijing gave permission to 4 government-backed firms, comprising steel giant Baowu Group and 3 state utilities, to ship in Australian coal, the first sign of an easing of the unofficial import ban in place since late 2020. The ban was imposed after relations between Beijing and Canberra turned sour over several political and public health matters. A full resumption in trade between the world's biggest coal consumer and the world's number 2 exporter could support global prices for the fuel used in power generation and steel production.
Indonesia has appointed several firms to conduct exploration of 3 oil and gas blocks, which include units of state energy company Pertamina and Utilise, the Energy Ministry said on Wednesday. The blocks are namely Peri Mahakam, Sangkar and Bunga. Indonesia plans to offer 10 oil and gas working areas to contractors this year, including a block in the South China Sea, amid efforts to make new discoveries and reach 1 million barrels of oil per day by 2030. For Bunga, located north of East Java, a consortium of PT Pertamina Hulu Energy and South Korea's POSCO International Corporation, Senior Energy Ministry official Tutuka Aradaji told a briefing.
Next, we have the top news in metal markets.
Gold prices were little changed on Wednesday as investors held off on big bets ahead of minutes from the U.S. Federal Reserve's latest policy meeting that could offer more cues on its rate hike path. Spot gold was steady at $1,833.30 per ounce, as of 10:53 GMT. U.S. gold futures were flat at $1,842.50. The market focus is on the Fed minutes which will be released later today, but if there's concerns about higher inflation or more persisting inflation scenarios, then we could see gold prices potentially facing some headwinds, Bank of China international analyst Co Fu said.
Copper prices slumped on Wednesday on worries of more central bank rate hikes that could curb economic activity and sluggish demand in top metals consumer China. 3-month copper on the London Metal Exchange was down 1.1% to $9,097 a ton at 10:30 GMT after rising on Tuesday to its highest since February 2. Stocks and oil prices were also weak ahead of the release of minutes from the U.S. Federal Reserve's meeting of January 31 Feb. 1, due at 1900 GMT. We will now look at the top news in the agricultural. Scarred by high and volatile prices, global wheat buyers are reducing their purchases of future supplies, but that raises their exposure to potential price spikes that would end up passed on to consumers already struggling with food inflation. Buyers and key importers across Asia, the Middle East and Africa are making so-called forward purchases of supplies for only about 2 to 3 months of their future demand versus typical buying of up to 6 months, according to millers, analysts and traders. Typically, rising grain prices take months to reach consumers because millers hold more supply and can weather the volatility. But with lower stockpiles and fewer forward deliveries locked up, consumers, especially in poorer countries, will feel the impact of a price spike more quickly.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.